And the professional data has come out, so let's take a look at this data together. Data doesn't lie, so let's try to see what it says. If analyzing this data is too boring, feel free to skip ahead to the summary. So, let's first take a look at the total number of housing supplies listed. In October, the number of housing supplies was 141 units, which is actually a decrease of 8% compared to the same period last year. Additionally, compared to last month, which is September, it has also dropped. Number 2, the number of sold houses is 88 units, which is an increase of 33% compared to the same period last year. This is also a good performance. Compared to last month, which is September, it is 76, an increase of this means that buyers are starting to take some action in this market. With the decrease in housing supply and an increase in buyers, what does this signal? The average price compared to the same period last year is basically around $826,000, and compared to a few months ago, it's $840,000, which is an increase of $1,000. So this is the total housing supply in the debt market. It's the 325, so generally, we look at the inventory, which is about 3.6 months. So, it's still acceptable. A 3.6-month inventory is starting to slowly lean towards the seller's side and have started to sell. From our recent perspective, October has actually been quite busy, and compared to other months, buyers are more active. For example, with our own listing, we received a total of 3 offers in just one day, and of course, the price was very good. So how should I put it? First-time buyers are looking for houses under $1 million, and these types of houses are selling relatively quickly. Buyers have actually started coming in, and when we communicate with them, the general attitude is to wait for the interest rates. Interest rates have basically come down, right? However, they're still at a high level, and the 3-year fixed rate hasn't decreased yet. So, for some people looking to take out loans, especially buyers, this can be a bit challenging. Some buyers are not in a hurry. They think that rates might drop further, possibly in January, so they prefer to wait. By next spring, there may be more options available in the market, and loan rates might be lower. So, why not wait until next year? This is the general sentiment among buyers who are currently waiting and observing. However, there is a group of first-time buyers who are moving, and that's a different situation. On the other hand, investors are wondering if interest rates will drop next year. Will housing prices rise? Many people are uncertain about this, and it's hard to say at this point. We need to see what happens next year. What will the extent of the interest rate cuts be? Will next year be busy or not? Personally, I estimate that there should be a slight fluctuation next spring. I don't think they will increase significantly. However, the activity level will definitely increase. So under this premise, many investors are now starting to look for properties. As long as the pricing is reasonable and does not decrease, it can be sold. However, according to the current market, not the market in February next year, sellers can actually sell their properties. Buyers are already prepared to take action, which is evident. Compared to the same period last year, it has increased by 33%, and that's a good thing. As a seller, one basically knows that this is not a particularly good time to sell, as it is at a 10-year low. For those who have been following us, and they also know that this year has been the toughest year, with the worst transaction volume. Therefore, sellers can feel that some things are starting to decline. It was very hot before. When spring comes next year, there should be a lot of housing supply available. Will there be more buyers? It seems that there will still be more buyers. We need to see which is more, supply or demand. So, how do we operate in the future? This month is November. The housing supply is definitely going to decrease because we are entering the Christmas season. The housing supply will gradually lower and the demand will slowly increase. Why do I say this? Because there are many positive news reports saying that the loan interest rate will drop. You might see this activity, but when you start paying attention to the housing supply, some houses that you find appealing quickly receive offers. Then you get a feeling. The first time you ask, there's already an offer. The second time you ask, there's also an offer. By the third time, you rush to see it, and the housing supply is low. You will feel a bit more anxious, which is completely normal. And then the third point is about activities. The activity level will definitely decrease. Why? Because the transaction volume will certainly be low, as there are fewer transactions happening. There will be fewer people buying homes. Those who want to buy a house may feel a bit anxious when they see that the housing supply is low. So, how should we operate this situation? Personally, I suggest that if you are a buyer, for first-time home buyers, if you see a good and reasonable price, it is indeed possible to buy a house. Personally, I feel that the current prices are relatively low, but I don't know how much lower they will go. I don't think they will drop significantly. I estimate that next year, some sellers might slightly adjust their prices, possibly looking to increase them in the spring. The buyer does not take out a loan, he might return to this price again. So I personally feel that now is a good time to buy a house. Many people are now choosing to be proactive because the rates will gradually go down. He is worried that it might increase next year, but will it really go up? No one knows. So do you think it will rise next year, or will it level off? Should you buy a house now or wait until next year? If you're a buyer or a seller, feel free to connect in the group or in the comments section. Thank you everyone. Goodbye.